Welcome to ShortView Trading. This is your morning market hit for Wednesday, 10th of March. What matters today for traders? Well, what a day we had in markets yesterday with the 10-year bond yield easing off from its recent highs of around 1.6%. And with that, a switch in leadership, and the tech growth areas of the market came roaring back. Illustrating that, there was reasonably bullish price action in the Nasdaq 100, which has been at the center of weakness in markets recently. Yesterday, though, the index held above the lows and closed above the highs from its recent trading days, and importantly closed above its key technical resistance level at around 12,750. There was also considerable strength in the Philly stocks yesterday, another key tech-centric index which rallied by 6.1% on the session. And if we look at some of the major tech names, Microsoft has held and appears to be rallying from its 50-day moving average, while Amazon has rallied from a pretty key technical level in the past couple of days. So tech is bouncing, but it wasn't just tech. If you look at this chart, you can see the cyclicals, defensives and growth areas of the market in aggregate all closed higher. The rally was pretty broad based, therefore, across parts of the equity market and indeed major equity indices. And that general strength in equities is consistent with the weakness we saw in the dollar yesterday. After a pretty sharp rally since late Feb, there was a mini reversal in the dollar index. It opened higher, it made a new high, and then it closed lower on the day. That's pretty bullish for equities and risk assets generally. And added to that, Bitcoin has been rallying back up towards its Feb highs. And importantly, in recent months and indeed years, it has led the direction of US equity markets, especially at key turning points. So the key question is, how much more upside is left in markets in the near term? Should we be long here, or are markets about to retest their recent lows? We answer all of that in our daily trading publication. It's available on our website and to subscribers, but we offer a 7-day free trial. And in that publication, we make a 1 to 2 week trading recommendation, long or short US equity futures. And really the recommendation is driven by the signals we get from our proprietary trading models. And they include models like this one, which is our risk appetite scoring system. It measures the ebb and flow of risk appetite in markets around the world. So when markets become greedy, that's usually the time to become cautious, and we get sell signals from the model. And when markets are fearful, as they have been in recent weeks, that's of course the time to get greedy, and that's when this model generates buy signals, as it did earlier this week. We update and publish that model among many others in our daily trading publication. Have a look at that on our website. What are we watching today? Well, we're pretty light on data and events. We do though get CPI inflation for the US for the month of February out at 1:30 London time today. All eyes on that. That was your morning market hit. Do follow us on YouTube, search under ShortView Trading. Join us on Twitter, LinkedIn and Facebook. Thanks for listening.